And now I'm just going to hand it over to Zach, so you can share more about you and just get us started with some general information, and then I'll monitor the chat too. So if folks just want to throw questions into the chat, I can, take a look, and Zach, I can flag you if I see anything that we want to address. Okay.
Awesome. Thank you, Connie. Can
Okay.
everybody hear me okay? And can you see my PowerPoint? I'm sharing my screen. Cool. Okay. So I think all the tech is working as it's supposed to. So thank you for taking time out of your day to sit in on this presentation. I hope it will be useful. There's a huge world out there in terms of questions, and you can get really into the weeds when it comes to tax stuff. So I kind of prepared a general presentation. And if you have questions, I'm going to make sure I get through this as quickly as I can so that we have some time to talk and have discussion if you have any questions that I haven't addressed. But if there's something that you think is related to what I'm talking about, please raise your hand and let's have a discussion instead of me reading slides. I think that would be more helpful. So some of the stuff might be very basic and you may already know it, and some of it might be kind of new, but I hope that there's enough here to kind of give everybody some bit of information that can help them when it comes to filing taxes, because as we all know, there's really no avoiding this part of adulthood, unfortunately. So my name is Zach Lees. I'm a staff attorney at Vermont Legal Aid, and part of my job is working within what we call our low-income taxpayer clinic. So, I'll give a quick introduction of Vermont Legal Aid and our tax clinic and what we can do to help you. We'll talk generally about our tax system in the United States, and then go through some specifics about audits and examinations, and eventually how tax balances are assessed, and then what happens if you end up owing the IRS and the Vermont Department of Tax. And then hopefully we'll have some time for questions as well. So Vermont Legal Aid, we're a nonprofit public interest law firm. We are funded by a whole bunch of different federal, state, and private grants. And we're pretty much a law firm that represents lower income Vermonters in civil issues, civil law issues. So you can think of us as public defenders, but for civil law. Generally, public defenders are assigned to you in the criminal court system. Civil law doesn't really have the same requirements. So Vermont Legal Aid fills that role. We're talking about things like housing and benefits, health insurance, employment law, things like that. We don't charge for our services. However, some of our grants do require that you fit within our eligibility requirements. I'll talk a little bit more about that for the tax clinic. So here's kind of the Vermont Legal Aid general pitch here. We've got our 1-800 number at the bottom. I'll also tell you how to get in touch in a couple other ways. And we provide expertise. Level of service depends, but these are a host of legal issues that we can help assist with. We also have an awesome website at vtlawhelp.org, which has a ton of information on all sorts of different issues, from family law to disability rights to housing, landlord-tenant stuff. So I really recommend you check that out. We also have a online portal where you can make a referral directly through our website if you want to get in touch. Otherwise, we have an intake hotline where you'll leave a message and somebody will call you back. We also have a Office of Healthcare Advocate, and these are incredible advocates specifically trained and experts in health insurance issues. So if you're having a health insurance issue, they don't have any income eligibility limits, give them a call. If you have questions about health insurance, how to get enrolled, if there's an issue that you're experiencing, that's the number for them as well. Can't recommend them enough. So our tax clinic, the Vermont Low Income Taxpayer Clinic, it's not a part of the government. It's just me. I'm the only attorney who works the clinic in the entire state of Vermont. It's supposed to be half of my job, but certainly takes up a bit more than that. And the general idea is we can open a case and help you out if you have something called a tax controversy. Generally, the question I ask is, did you get a letter from the IRS? We're talking about anytime the IRS disagrees with what you filed, if they're disallowing a credit, which can be very valuable, so they're changing the amount of your refund, if they're holding your refund, if you're getting letters saying you owe tax, if they're saying they're going to take collection action like a levy or a lien. So generally, if there's a tax controversy, which I can get involved in, you should give us a call. We do have some income limits and some amounts and controversy limits, meaning that generally it's like 250% of federal poverty level. I'm not quite sure what that even is in 2023. I would say if you have an issue, give us a call and we can at least give you some advice and information and direct you where to go if we can't actually work with you directly. The other limit is we're supposed to not take on cases if there is an amount in controversy for any tax year over $50,000. I don't think I've ever, well, I've had a couple cases involving that over $50,000 number. We can waive that. So if there's something you're dealing with, give us a call. We can figure out how to best assist you or at least point you in the right direction. And then the last bullet point here is we generally are not here just to do tax preparation. There has to be a controversy at issue here. If you just need a tax return prepared and filed for 2022, that's not us. I'm just an attorney. I've come to the tax world in a roundabout way where I've had to get up to speed on this. You don't want me doing your taxes. I can represent you if you end up having a controversy, and we can even litigate this issue and like deal with the IRS in that way. So you want me as an advocate. You don't necessarily want me preparing your taxes. That said, if there's a tax controversy, which we can solve by doing a filing, then I can get involved and help prepare a return at that point. But as a standalone preparation thing, that's not exactly what we do. And I can direct you where to go if you're just looking for tax prep. So again, the question on like tax controversies, did you receive a letter? These are some red flags if I think there may be a tax controversy that either exists or will exist. And we'll talk more about how these things can affect your tax situation. But if you've received any new one-time income sources, if you received a settlement from a lawsuit or an inheritance, if you've claimed credits or dependents that could be contested by another person. So if you have a co-parent who may be trying to claim the same dependent that you're trying to claim, or if you're getting letters or you know that you have balances owed for previous tax years, those are all pretty standard tax controversies. So we're going to get into kind of the U.S. tax system and some of the, well, how do we say this? The United States tax system is really unlike any other tax system in the developed world. In many other countries in Europe, they will tell you what you owe by mail, and you just either sign off on that and send them the money. They don't have a preparation situation where you have to make a filing. So a lot of the issues that we see stem from the uniqueness of our tax system in the United States. As we know, we've got many different types of taxes. We're going to be talking about income tax today. That's really the purview that I work within. And this is Form 1040. I'm sure you're all familiar with Form 1040s. And we're talking about people who are wage earners or self-employed people. So that's what we're going to be focusing on today. I always love this slide. Once you work in the tax world a lot, it starts to make more sense. But this was an attempt by the IRS to simplify the tax system in the United States and all the different divisions within the IRS. And I love showing it to people who have no experience professionally with the tax world, because if this is your attempt to simplify things, then you can understand that the system that we have to work in is not the most simple, and in fact can appear to be very complicated.
Zach,
yes.
can you make your slide larger? Because I see it looks like it's in planning mode, maybe.
Okay, let me see here.
Or like if the display settings will let you have a different.
Yeah.
Because it's showing us the slide and then your next slide. But I want to just see your main slide because that's I want to see that bigger if I can.
Oh no. Is that any bigger?
It's still showing.
Oh, you know what? Let me try this way.
It's fine. I mean, I can see it, but I was thinking it might be easier to see the intricacy if it was a little bigger.
Yeah, I think I've fixed that. How does that look? Any better?
Ooh, that's better. Yes.
Okay, and apparently we have closed captioning now as
That
well.
works. Let's do
Amazing.
that. That's easier for me to see. Can folks see that better? Just thumbs up if you're all right with it. Yeah, I see heads nodding.
Awesome.
Okay, carry on. Show us this mess. What is happening?
Yeah, so the main point that I want to get across here is that every tax year is its own separate account. That's the first thing, is that every tax year is its own separate account. Every filing for every tax year is its own standalone thing. Now, issues between tax years can affect years that are coming up. So if you owe a tax in 2015, that can affect whether you get a refund or not in 2022. The other part here is that the IRS is generally first run by computers, and there's many different divisions within the IRS that don't necessarily talk to each other well. And so this roadmap is going to give us an understanding of kind of the path a tax return takes through the IRS system. And it starts in the green. I don't know if you can see that little star in the upper left. That's the start of this. And it says taxpayer begins filing process. And that is the tax return preparation function. That's what the IRS calls each division within the IRS. So we're in the tax return function here. And so the idea here is that in the United States, the taxpayer has the responsibility to file a tax return if they are required to, and that starts the process. So we always get questions here about, do I have to file a tax return? Generally, the filing requirement is if you are earning above the standard deduction in any given tax year, then you are required to file a tax return. That's usually the general advice that I provide. However, it's not so simple, because there may be other situations where you should also, or may be required to file a tax return. If you're self-employed and you earned over $400, then you're supposed to file a tax return. If you are a single filing status and you're under the age of 65 and you earn over $12,950, you're required to file a tax return. If you receive a premium tax credit on the health insurance exchange, you're required to file a tax return. There also may be some other extenuating circumstances where if you have concerns about identity theft or somebody using your social security number, you should file a tax return, because that prevents other people from using your social or the social of a dependent. And so generally you're required to, regardless of income, if you're self-employed and earn over 400, if you have a distribution from a health insurance related account, if you receive premium tax credit, or if you've made excess contributions to an IRA. There are all these other different requirements for why you should file a tax return. I think the most simple one, I'll go back here, is just if you are at or over the standard deduction for whatever filing status you're going to choose, then you have a filing requirement. And if you have questions about this, it probably doesn't hurt to file a return, because maybe you'll get a refund. Maybe there's a valuable tax credit which you're not thinking of, which you can claim if you file a tax return. Any questions on like the filing requirement? I get that question a good amount, and I just want to make sure that's fairly clear. Okay.
One question
Connie.
I had from an employee that asked me if there was a penalty if they didn't file, and I think he thought he has money owed to him, so it was, I guess, so that's a question. If you don't file, is there a penalty? So could you just speak to that if you?
Yeah, certainly. So generally there are two types of penalties. There's a failure to file penalty and a failure to pay penalty. And then there's also an interest rate. And even the penalties function similarly like an interest rate. You will not be penalized for failing to file or failing to pay if you're due a refund. You won't get your refund if you don't file, but they're not going to penalize you if you file late if you're due a refund. If you are going to owe tax, so if you prepare your Form 1040 and at the end of that form it shows that you're going to owe any sort of tax, then you can be subject to a failure to file penalty, which starts to accrue from the date you should have filed the return by, which is generally April 15 of each tax of the year after the tax year. And then there's also a failure to pay penalty, which will accrue on the balance that you owe if you don't file on time and you don't actually pay the IRS by the April 15 deadline. So if you're going to be due a refund and you're not going to owe tax, then there is no penalty here. There are some statute of limitations issues, meaning that you only have 3 years from the date the return was originally due to file a return in order to generate a refund. So if I knew that in 2017 I should have gotten a $2,000 refund, but I never filed my return, I can't file that return at this point and get a refund back, because that 2017 return was technically due in April 15 of 2018, and the 3-year statute of limitations expired April 15 of 2021, if I did my math correctly there, right? So you may not be penalized, but if you wait too long, then that refund is toast. So that's something else to think about. The other thing, though, is like if you didn't file in 2020, but you think, man, I never got earned income tax credit that I could have gotten if I filed that return, you still have time to go file that return. You have 3 years from the date the return was due to file a tax return to get a refund. So I think I answered that. I'm going to move on unless there's any other questions. Awesome. Okay, we looked at this one already. So even before we file the return, I get a lot of questions about withholding, tax withholding. For employees, W-2 employees, most employers have a human resources, or at least some person who's figuring out how much tax to withhold out of your paycheck. The goal here is to withhold enough so that when you file your return at the end of the year, there has been enough taxes taken out of your paycheck so that you don't owe a huge tax bill at the end of the year. And hopefully you'll actually be due a refund. And the amount of the withholding depends on how much you earn. So what tax bracket you're in, which varies depending on your income level. And then also, you as an employee have the right to tweak your withholding using a Form W-4 and giving that to your employer to tell them how much to take out of your paycheck. Now, this is a balancing act here. Obviously, you want to get as much of your paycheck as possible because you need that money to live on. At the same time, you don't want to owe tax at the end of the tax year and then not have any money to pay them. That's being called under withheld. So if you're under withheld, then you didn't have money taken out of your paycheck each pay period, and you're going to owe tax at the end of the year that you'll have to come up with out of your own savings or wherever you find that money. Conversely, if you're over withheld, you'll be due a refund. You don't want to be too over withheld, though, because the IRS does not provide interest on the over withholding through the tax year. And so that money is probably better used being put into a savings account or other sort of savings vehicle. I do hear about a lot of people who say, I'll never be able to save the money on my own, so I let the IRS kind of hold that money for me and I get my refund check at the end of the year. That's a choice that you can make, but generally you don't want to be under withheld, but you also don't want to be too over withheld as well. Okay? So that's for W-2 employees. What if you're self-employed? You're getting 1099s, which are the income reporting document that a self-employed or a gig or contractor type person would receive from all the people they work for through the year. As a self-employed individual, your obligation is to estimate or pay estimated taxes quarterly. And there's a specific form, Form 1040-ES, and then there's also a IRS website, or you could mail in a paper check to make these estimated payments. Ask me how many self-employed people I see who don't make quarterly estimated tax payments. Now, clearly, this is an obligation that the IRS says you should do every quarter. Most of the self-employed people or gig or contractor type people that I work with don't make estimated quarterly tax payments because it's a huge pain in the butt. It requires a lot of initiative to sit down and figure out your quarterly payment and make that payment. And again, this is money that you're taking out of your paycheck for the IRS to hold or to pay IRS. And a lot of my clients don't have a huge amount of wiggle room each month, so they need that money in their pocket as opposed to going to IRS. The problem is many 1099 workers that I see, if they're not making estimated quarterly tax payments at the end of the tax year, when they tabulate how much tax they owe and they have zero tax paid in, they're going to be severely under withheld. And if you don't have the savings or money left over at the end of the year, you're going to have a huge tax bill that you're not going to be able to afford. And that's going to be bad news because you'll end up owing the IRS, and we'll talk about what happens at that point. Any questions on withholding generally? if you have questions about withholding, you should really talk to your HR people if you're a W-2 employee, and don't be afraid to fill out a W-4 form and tweak the amount of withholding that's coming out of your paycheck. I have seen even W-2 employees who end up under withheld because maybe they got a raise and they were bumped into a higher tax bracket, or maybe the HR people at one job didn't know that you were also working a second job. So if you combine all that income together, you're in a higher tax bracket than the HR people first estimated. And so you certainly can be under withheld even if you're a W-2 employee.
Zach, I just want to pop in because this is a question I think a lot of workers have when they start jobs, end jobs, or if things change. And so one of the roles that resource coordinators can play is to help you connect with the IRS withholding calculator. So if you're at work and you want to talk to your resource coordinator about what it looks like and where you're at during the tax year, it can be at any time, right? You can adjust for that at any time. Talk to your resource coordinator and you can look at the calculator together with your last pay stub. You can enter your year to date and just see where you're at. And then you can know, how do you use the W-4 from there? And what do you need to adjust for? Withholding is so confusing, but it's also great to just have regular checkpoints with that calculator to know where you're at and if you're in a comfortable place for your tax year. So withholding calculator. I love that thing. We should do it daily. Just put it in your calendar.
Yeah. Thank you, Connie. That's a great great point.
Never mind. Don't do that.
Yeah, maybe not daily. I don't know. Okay. So how this all is supposed to work in the United States is when the year is over, I sit down with my Form 1040, or I have a preparer do this, and I compute the amount of tax that I think I owe based on the records that I've received from my employers. And I send in my tax return to the IRS in the state of Vermont. Most people need a tax preparer to help them with this. And then the open secret, and I hope everybody knows this, is the IRS and the Vermont Department of Tax, they already know how much you earned. If you're a W-2 employee or a 1099 employee, copies of those W-2s and 1099s go to the IRS and to the Vermont Department of Tax at the same time that you receive a copy. So if you if you miss a W-2, let's say you have multiple jobs and you miss a W-2 or you miss an income source, the IRS computers will catch that and they will adjust your return. So the IRS computer will look at your social security number, they'll look at the W-2s and the 1099s that they have on record, and they look at any other sorts of tax documents, and they verify that income and they match it against what they have and what you reported on your tax return, and they look at the social security numbers for you and for any dependents you have there, and they verify that those are real and make sure nobody else has claimed those. And for most people, there really aren't many issues. And I think, you get your refund check or you include a payment with your tax return. If you pay the tax when you file the return, and it's usually the mailbox rule. So April 15 is the deadline to file a tax return most years. And if you file the return on time and include payment, and you've had your return prepared correctly and you don't miss anything, then you won't really run into issues. The computer will verify all this, and you will get your refund check, or you'll get confirmation that you don't owe. I like to include, this is a W-2 form along with a pay stub here. So that is where you're calculating how much in wages you earned for the entire year and how much federal tax was withheld out of there. And this is a 1099 form. This is what it would look like if you were a gig contractor, if you drove for Uber or, worked any other sort of independent contracting type jobs. So W-2s and 1099s, they're supposed to be sent out by January 31st. Sometimes they're incorrect. You're supposed to contact the employer first. You can then call the IRS and have them try and contact the employer to fix a W-2 or a 1099 if you disagree with the amount earned. And there's also a specific IRS form if you never get one, but you need to report income, but you don't have a W-2 or 1099 for it. So there are ways to still file your taxes even if you never got the 1099 or the W-2. So the next you're filing your tax return is your filing status. These are fairly straightforward. There are 5 of them. Single, married filing jointly, married filing separate, head of household, and qualifying widower. The filing status corresponds with a given deduction amount. So for the tax year 2022, which we're in the filing status for, you get a standard deduction is the amount that you can remove from being taxable income off the top of your total income, right? So in the United States, we've made a determination that we want people to get married, and so we incentivize people to get married by giving them a larger deduction, standard deduction, than single people. Head of household requires you to provide over half of the financial support in a household and have some sort of dependent that you're supporting. We give them a larger standard deduction because we want them to have more money in their pocket, not be taxed so much. So if you're single or you're married filing separately, meaning that you're married but you're not filing a joint return with your spouse, the policy choice is that you pay more in tax because we want to discourage those sorts of things. Any questions on filing status? I don't want to get too far into the weeds on that. And then the next part is dependents. It used to be that the deduction amount depended on how many dependents, like you would get a larger deduction amount off of your income if you had more dependents. Now, in 2022 and beyond, you don't get those exemption amounts, but you still want to claim all the dependents that you are entitled to, for one, so that nobody else is claiming them. And then for two, there are a lot of other valuable tax credits that you can get that are refundable, meaning that the credit, like an earned income tax credit or a child tax credit or an additional child tax credit, those can be applied to any tax that you owe. And then if there's any left over, you get that as a refund check. So those are really valuable tax credits. And to get some of those, you have to have dependents. If you're claiming head of household filing status, you also would need to have a dependent. And with earned income tax credit, while you don't have to have a dependent to claim an earned income tax credit, the earned income tax credit is much larger if you're claiming a dependent as well. And so for earned income tax credit issues, for instance, I see a lot of these earned income tax credits get denied or get audited where IRS wants you to substantiate that you were eligible to claim this dependent. And so I also see a lot of nefarious sort of tax preparer people who will split up children in a household to allow an uncle or somebody else to claim a child when they shouldn't have. And there can be a lot of issues with this. And so you want to make sure that if you're claiming a dependent, that you are the one who is eligible to claim the child. I see a lot of this with parents who are divorced or separated and the child is splitting time. And generally, unless there is a divorce order, and even then it becomes very hard to enforce those things with the IRS, generally you want to look to where the child spent over 180 nights, over half of the year. And the question becomes, how do you prove that to the IRS? So if you're in a situation like that where you think somebody else may try and claim your child or your dependent, you want to make sure that you're keeping a calendar so that you can prove that the child spent over half the year with you. And so we can talk more about that when we get into examinations. So again, the IRS computer checks tax returns against the information that it receives from third parties like employers. If there's a mistake on the return, you'll... Sorry?
We have a question.
Yes, please.
So what if a dependent turns 18 during the tax year? Can you still claim them?
Yes. So yes, you can claim them. Generally, the rules depend on what the credit is that you're claiming. I think for like the child tax credit and the earned income tax credit, it's under the age of 19, I believe. Or if they're a full-time student, but they're still living at your home, then it's like age 24 or something like that. Really, it's important to look at the rules for qualifying child. I believe the age requirement, though, is age 19 or under. or under age 19 by the end of the tax year. So if they're 18 and they only turn 19 in 2023, then you would still be eligible to claim that dependent in tax year 2022. Does that make sense?
Thank you.
Thank you for asking the
Question.
question.
I have
Yeah.
another question backing up slightly
Yes.
for being under withheld.
Yeah.
So if an employee does owe taxes for that year, can they create a tax plan without being penalized? For instance, pay once a month if they don't have the cash on hand? How would that work?
Yeah, and I'll get to this as well when we get into like what happens when you owe tax. But the general answer is yes. It's called an installment agreement. It's a payment plan. There is a failure to pay penalty that like continues to run, but it's cut in half. So installment agreements are great if you're going to end up owing, but you can afford a monthly payment. And we'll talk more about that. And I can help you set that up if that's the situation you're in. Awesome. Okay. Any other questions right now? Okay. So this slide is meant to say that like usually you won't have any issues, but if the IRS wants you to prove that you were the one who was entitled to claim a dependent or prove a business expense, or if they want to make an adjustment or change anything on your tax return, they will do so by sending you a letter. The IRS never calls, and they love paper documentation and they love correspondence. So they'll send you a letter. You might even get a letter from the IRS, even if your tax return was correct. We call that winning the audit lottery. And, you know, people have, I think, a preconceived notion of what an audit looks like. No doubt it can be stressful. At the same time, most audits are fairly narrow in what they want you to prove. And most audits are done via correspondence, meaning that you're not meeting with an IRS agent who's like grilling you in person. Generally, they send you a letter asking you to provide specific documentation to prove one or two things on your return. If you get a letter, that's something that our clinic can help you with. So you also have rights as a taxpayer. The main one that's not really on here is, and we'll talk more about this, is something called due process. This is what I know about as an attorney, right? Is that the government can't just say that you owe them unless they give you an opportunity to respond. So you have due process rights as a taxpayer. You have to be given notice that the IRS wants to make an adjustment and the opportunity to respond before they can finalize that and formally assess that you owe them tax. You also have many other rights at the IRS. You have the right to privacy, to respect, to the opportunity to prove the correct amount of tax, to appeal if the IRS decides against you. You have the right to be represented. And then there's this other one here where if you don't have any money left over at the end of the month, so if I have $1,500 coming each month and I spend $1,500 each month on necessary living expenses, that's like the essential stuff: housing, transportation, food, personal care. If I have $1,500 coming in and $1,500 going out to pay for those essential bills, the IRS cannot put me into what's called financial hardship by forcing me to pay them a dime. Now, the interest and penalty will continue to accrue on any balance that I owe them, but there's something called currently not collectible status, which prevents them from collecting from taxpayers if it would force them into what's called the financial hardship, okay? And we can talk more about collection issues later on. So now we're moving from the green section in the upper left corner, the return preparation. We've moved through the processing stage, which is the middle top, lighter green, I guess. We've talked about what happens in examinations, which is on the upper right. And now we're in what's called the assessment station. And this is when, well, we're going to talk about exams and then move into the assessment station. So again, most of these are done by mail. They can be narrow, they can be broad. Generally, the IRS is asking you to provide paper documentation that you are entitled to claim any of the credits or deductions or expenses that you have filed for on your tax return. Depending on what the IRS decides at the end of the exam, you might not get the whole amount of refund that you thought you should have gotten, or you might even have to pay some of it back. Now, there's a process here where before the IRS can formally assess, and I use the word assessment as a lawyer, that's a specific word. It means that a tax debt is finalized and the statute of limitations on that tax balance is starting to tick. So before an assessment is finalized, you get due process requirements. Now, assessment can be done by the IRS. It can be self-assessed, meaning that I file a return that shows that I owe money at the end of the tax year and I don't include payment. It can be done by examination, like an audit. It can be done if you mess up a math error thing on your tax return. If there's a calculation issue, the IRS computer can actually just change that and automatically assess. Or if you don't file a tax return and the IRS thinks you should have, they'll send you a couple letters saying, hey, file a return. Eventually, they can prepare a substitute for the return for you, meaning that the IRS prepares a return because you never did. So there's many different ways for a tax to be assessed. Most taxes are self-assessed, meaning most of the clients that I work with knew they were going to owe taxes because when they got their return prepared, it showed a balance that they could not afford, and they filed the return, which is the right thing to do. But you're telling the IRS that you're going to owe. It's really hard to argue otherwise if you are self-assessing and telling the IRS that you're going to have a balance owed. And these are the types of letters that you get if, in the process of the IRS finalizing the assessment. As I said, there are due process requirements here. They have to notify you that they think that they're going to change your return, and they give you an opportunity to respond. So you can see that this is a proposed amount due here, or they're saying the information doesn't match what we have on file, give us a call or send us a document to help us process your return. They can also look like this. This one says that a specific form is incomplete or missing. Please complete the form and send it back to us so we can do this. And this provides a window in time for a taxpayer to contest what the IRS wants to adjust, to provide more information and documentation, and to hopefully win your argument. And the idea here is that you want to engage in this process as early as possible, because the later you wait to respond to the IRS, the harder it is to get things changed or corrected later down the line. And there's actually a federal court called the United States Tax Court, where you can actually litigate a tax issue. It's specifically set up only to hear tax controversies. You only get there if you appeal in time. So if you miss these letters or you just don't open them or ignore them, you're giving up the right to contest assessments or adjustments with the IRS. Usually they send at least 2 or 3 letters proposing an assessment, usually with more threatening or escalated language. And then the big letter that I always look for is what we call a statutory notice of deficiency letter. This is a formal notice of deficiency. This is the formal assessment letter. And this is what it looks like. It says notice of deficiency. And then it says you have a right to file a petition in the United States Tax Court. We also call these 90-day letters because that's your window in time to file a petition in the United States Tax Court and litigate a tax issue. So this is a very serious letter. This is the one, if you miss or you don't act in time, can really narrow your options when it comes to assessments. So it's another notice of deficiency letter. Most of them will say notice of deficiency, although sometimes these IRS letters are written by some sort of computer that doesn't speak English. So if you have a question, yeah.
I want to jump in here because I think that this is a very real thing. People are terrified of the language that the IRS uses. And if you get letters and you don't want to open them alone, you are not alone. You go find someone and we will figure it out. It's really scary and stressful. And the words, I mean, what is a snod? That's terrible. That's not even English. I mean, it doesn't make a lot of sense, right? These letters are big barriers for most people because it's very confusing. So don't think you're alone in that. I think that most people that get any written communication from the IRS are generally not really clear on what the letter means right away. So we'll open it, take some time with it, figure it out. But yeah, I'm really glad you showed examples of the letters, because it's also like, you don't see them often, and when you see them, it just feels like a really bad thing. But I think just to know that this is normal, this is what they look like, and that it's just their communication style. It's them, not us.
Right. And I can help you decipher these. If you get a letter, you can give us a call. And the other part here is like, you have options. So, and I'll talk more about them as well as we go here. Now, this letter is now the IRS has formally assessed that you owe, and now they're threatening some sort of collection activity, right? And so they'll say, we're going to seize your property, right? It makes it sound like we're going to like barge in with agents and take your television out of your house or something like that. I'm here to tell you that is not how it works. And while they may use escalated language to try and get taxpayers to respond or pay, you have rights as a taxpayer, and my job is to help you advocate for those rights. So again, why do people end up owing tax? Generally, it's because they're under withheld for whatever reason, or they're working multiple jobs and they're under withheld that way, or they're self-employed because they're not making quarterly payments, or they've received one-time taxable income like a settlement or canceled debt or retirement distribution, things like that. Now you have options. So I would show the map again, right? The tax has now been formally assessed, and now we're in the middle red section called the collection function. And so you have options as a taxpayer here. We talked about currently not collectible, or what the Vermont Department of Tax calls financial hardship status. We talked about payment plans. And there's other things called the offer and compromise, which you may have heard on the late night commercial with the guy who's like, do you owe the IRS? Call me and I can help settle your debt for pennies on the dollar. And it's usually like a seedy infomercial, and you would never want to call that person. And I would agree, because they will charge you a lot of money and they mill cases. I'm not saying that they might not be able to help you, but I think you want to have a better understanding on what your options are before you call up a firm like that. So again, we're in collections now. I really like to reassure everybody I work with, you're not going to go to jail. They're not going to foreclose on your primary residence. They're not going to garnish Social Security or seize property or wages that are exempt under Vermont law. And there's a whole list of exemptions. And for many lower income clients, as I said, if you don't have any money left over at the end of the month, and you don't have any like big ticket assets, which could be liquidated, or money in investment accounts or savings accounts and things like that, then you could be what's called currently not collectible. That doesn't change the fact that you owe the money, but I think for many people, the concern is that they can't pay, or they can't pay enough, and they become frozen because they don't think they have any other options. And my response is that you do have options, and there are thousands of people in this country, probably millions, who owe the IRS. And it is not a moral failing or anything like that. And you have options that we can help work through. So while it sucks and it's scary, you shouldn't let that deter you from taking control of the situation. And I think when it comes to dealing with any sort of big bureaucracy like this, it's much better to take control of the situation than it is to try and ignore it and hope that nothing happens. So I'm just going to talk about what the IRS and the Department of Tax can't do if you end up owing tax, right? Again, this is the financial hardship piece. You have to be able to pay for reasonable and necessary living expenses. If you don't have enough money at the end of the month after those are all paid, then the IRS can't expect you to pay them anything. They're not supposed to take any of your Social Security benefits, and they're not going to seize a vehicle, your vehicle or your primary residence. So, you may think that they're going to take your home. They can issue what's called a notice of federal tax lien. A lien is where the government files a piece of paper in your town clerk's office where they will hold their place in line, so that if you end up selling the home, then they could potentially get paid out of any equity. But they're not going to foreclose on your home if you owe tax, okay? Vermont Department of Tax, similarly, they're not going to take your retirement account. They're not supposed to take any Social Security benefits or disability benefits. They're not going to be able to garnish any wages if you're also receiving like Reach Up or Social Security benefits. There's a whole host of exemptions that they're not allowed to touch. And that's the most important thing to think about here. But again, don't ignore the issue. These are large government agencies that are what we call super creditors. So they can certainly reach out and touch you if you don't manage the situation. So they can take your state and federal tax refunds. They'll even take your renter rebate or property tax adjustment if you owe tax. They can send your account to a private collection agency. They can seize money out of bank accounts. They can garnish wages if you have enough wages. They'll file a lien. They could even revoke a professional license or even your passport if you owe over $50,000 to the IRS. So there are certainly concerns here. The main idea here, though, is like we want to manage it. We don't want to ignore the issue. So again, how did this happen? Most taxes are self-assessed. Generally, it's because people are under withheld in some form or fashion. And the idea here is if you have a tax return prepared that shows that you're going to owe tax and you don't have enough money to pay that full balance, you should still file the tax return on time and pay what you can. That reduces the total balance. You'll avoid a failure to file timely penalty. And then you have options in terms of working out how to manage the rest of any balance due. So even if you know you're going to owe tax and can't afford to pay them, you should still file the return. I see a lot of people who just say, well, I'm not going to file because I don't want to have a tax balance owed. I think that's a bad idea because you will get penalized eventually. Again, if you're not sure whether you have a filing requirement or not, then I would say file or at least get some expert advice from a VITA site, which is a volunteer income tax preparation site, which I'll talk a little bit about. So again, the IRS is proposing a tax increase. Can you do anything? Hopefully, after listening to this presentation, the answer is yes, you certainly can. You should respond to the IRS. They're not going to call you. You can mail in correspondence or you can fax them. Or you can try calling the IRS, but be prepared to be on hold for a while. That's just kind of how it goes these days. The IRS runs on paper documents. So if you have supporting documentation, that's what they're going to look for. You're not going to go to jail, right? Not having enough money to pay taxes is not a crime. Now, there is a crime of hiding income and money to avoid paying taxes. That could be criminal, but you're not going to go to jail for owing tax. And there are many different ways to manage it. So the government will work with you. The IRS will offer payment plans. There's a couple different types of payment plans, which I can help you set up or discuss with you. They're not going to take your home or your car. You know, generally they don't do seizures like that anymore unless you're like wealthy enough to own multiple cars and multiple residencies like that, but that's usually not the case. Again, the IRS has a 3-year statute of limitations to audit or examine your tax return. So some people ask me how long they should hold on to tax documents. Generally it's 3 years. Sometimes it can be 6 if they suspect fraud or something like that. Generally, the IRS tries to audit returns as soon as possible after they're filed, but I do see people get letters about prior years a year or two after the fact. That certainly happens. And that can cause problems because, you know, if you got a big refund in 1 year with a lot of earned income tax credit, let's say, you know, and the IRS 2 years later is saying, oh, we shouldn't have given that to you, you owe us that money back, that can create a big tax balance that you may not be able to afford. So we can assist with that.
Zach, how often does the IRS or how many audits does the IRS do in a tax year? Like what's the average number of audits they try to do? Do you know?
Yeah, I don't have a good number for you, Connie. There's just been a couple studies and reports on this, and you know, unfortunately, the IRS audits lower income taxpayers at a higher rate than the ultra wealthy. And part of that is because they didn't have enough staffing. So with the American Rescue Plan, or one of the last big pieces of legislation the Congress passed, they gave several $1 million to the IRS to update their systems and also hire more people to be able to audit the very wealthy. But unfortunately, right now, the system does audit lower income people at a higher rate. If you're claiming an earned income tax credit, you will be audited at a higher rate. It's hard to say, like claiming an earned income tax credit definitely increases your chances of being audited. There's no getting around that. And the system is not friendly to lower income people or people of color. There is a lot of systemic racism built into the system. So right now, this is what we have to navigate through. And so my only response is, if you do get an audit letter, contact our clinic or contact a professional and see if you can get some assistance in figuring out what exactly they're looking for and what you can do to win your audit.
Thanks.
This is another big thing here. And if this is one of the other things that I hope that you can take with you and tell people as well is there. So we've talked about a statute of limitations on how long you have to file a return to get a refund. We talked about a statute of limitations on how long the IRS has to audit or examine a tax return. This is the last big statute of limitations that is really important for taxpayers who owe the IRS. And this is what we call a light at the end of the tunnel here. The IRS has 10 years to try and collect a tax debt from the date the tax was formally assessed. So the way it goes is like this. I file my 2020 tax return in April of 2021. In June of 2021, the IRS sends me a letter formally assessing that I owe them $5,000, let's say. The IRS then has 10 years from June of 2021, when they formally assess that I owe that tax, to try and collect that money from me. Interest and penalty continues to accrue on that tax balance. However, after 10 years, now there are certain things that if I do, the IRS can stop the clock. We call that tolling the statute of limitations, effectively extending how long they have to collect from you. But generally, if I don't do anything, that 10 years starts ticking on the assessment date. And by June of 2031, that balance, along with all of the interest and penalty, will expire and fall off of my account. And I will no longer owe for that specific tax year. Does that make sense to everybody? It's really important to know, because I feel like a lot of taxpayers think if they end up owing tax, that balance is going to follow them around for the rest of their lives. And that's just not true. It's a 10-year window. 10 years is a long time, but it's not the rest of your life. And that also is an implication for how we manage tax balances. So if people owe a tax balance from 2013 and we're coming up on when that debt expires, there may not be a whole, there may not be much that we would want to do, because we know that debt will eventually expire and fall off of the account. So I hope people understand that it's a 10-year window for the IRS to collect. It can be extended if you do certain things like request an offer in compromise, or while they're setting up an installment agreement, they'll pause the clock. Generally, it's a 10-year statute of limitations. So obviously, if you end up owing tax, you pay the full amount if you can. If you can't pay the full amount, then you can set up a payment plan. And if you don't have any money to be able to afford a payment plan, and you want to try and settle the total amount of tax for a calculated amount the IRS thinks they could collect, that's called an offer in compromise, which I could talk more about with you at a later date. I don't want to get into the weeds on that right now, but those are generally the three main options if you end up owing. And then there's also what's called currently not collectible status, if you'll be in financial hardship if you have to pay IRS anything. It's tax season right now. You're probably thinking about, where do I get my return prepared? Many people will pay to use TurboTax or go to H&R Block. They're fine. What I'll say is that if you qualify for volunteer income tax assistance, then you should do that, because it's free. They're trained and they'll do a great job, and you won't have to pay TurboTax anything. There's also a lot of different free filing options. If you have any sort of savvy, you can go to the irs.gov/free file, and there's like free software where you'll have to like plug in the numbers yourself, but some of them are very good. And myfreetaxes.com is a real website, so it's pretty funny. So those are options for free tax preparation. I heartily recommend VitaSites. There's VitaSites all over Vermont. If you qualify, then you should give them a call to make an appointment.
Yeah, the Vita sites, and then AARP Vermont also has some of their sites in mostly libraries and community centers, and they're also equally great and a good resource to look into for appointments.
Yeah, and so like I think a lot of VitaSites will give you a checklist, but these are some of the things that you'll want to make sure you have on you if you're going in to get your taxes done by anybody, really. The big ones here are if you're renting, you should certainly claim a renter rebate on your Vermont state income tax return, and you'll need a completed and signed landlord certificate. If you're doing a property tax adjustment, you'll need your property tax bill from the town. Social Security ID cards for all members of the family, all your income documents, pretty much all your tax documents, things like that. The main thing here is like you should double check your return, even if you're getting return prepared by somebody else. You're on the hook if there's an error on your return. Like there's ways to try and hold the preparer responsible, but it's pretty hard. So when you file the return, it's you doing the filing, so you want to make sure it looks correct. There are IRS offices in Burlington. Generally, you can only do this by appointment. They're also now offering hours on Saturdays. Although they also apparently just had a huge pipe burst and flood in the Lakeside building there. So I don't know what the capacity is to see people in person. The Taxpayer Advocate Service, these are IRS agents that work within what they call TAS, which is a independent division within the IRS, which is set up to help taxpayers. I partner with them a lot, and they can actually like reach in and figure things out a little quicker than I can in certain ways. So they can be a good resource as well if you're having an issue. And then the clinic that I work for, at Vermont Legal Aid, that's our 800 number. We also have a website where we try to keep very up to date. My office is in Burlington in the North End. So if you think you want to speak with me or get more information on any issue that you're experiencing, give us a call or check out our website. I think that's it. Yeah.
Thank you. We also are waiting on Moses, your dog. So is he there?
He's downstairs. I can try.
No, that's okay.
Does anybody have any questions that I didn't address? I know we're kind of out of time, I think, but
no, we're out of time.
We do have one quick question. It's probably not quick, but what if somebody passes away during that year? Does the family still have to have the taxes filed?
Yes. Yeah, and there's a whole host of rules related to filing status and also getting a return prepared for somebody who's deceased. I would recommend that you contact a preparer to help you navigate that if you're in that situation. There are certainly a lot of specifics involved depending on when they passed away and what the financial situation was at that time as well. And of course, did they have a filing requirement or not? So like that's another question as well.
Okay, thank you very much.
Thank you so much. Have a great day, everybody.
Thank you. Thank you, Zach. Have a great day, folks. Bye.